Good morning, guys. Welcome to this Thursday, February 6th. And it looks like we got a holding pattern going on. Yeah, holding on to the gains in the overnight. No crazy swings, at least this overnight. We got more earnings coming out this afternoon. I think Amazon earns Amazon reports after their earnings after they close. We'll see if they can hold on to the gains. So yesterday they cleared that 60, 65, 70 area and they've been holding above it. So they took out the 40s. Now we cleared the 60, 65 area. Now we're running up to that 6100 level. And that's where the standoff is going to come. If they're going to be able to take that out, we're going to be in good shape. But at this point, it looks like a pretty range bound overnight. Nothing crazy as far as I can tell. The news this morning, job cut report came out, was a little bit on the upside. Jobless claims and productivity coming out at 8:30. We have a nat gas report at 10:30, and that's about it for news. One Fed speaker at 2:30, but that's it. We have one more, but that's later in the afternoon. So that's the news for today. Then, of course, tomorrow we're getting employment numbers at 8:30. That's going to be the big report, employment situation. So chances are we're going to get more of a range-bound day today. But I'm going to start off, given the yesterday's little rally, that late in the day move to the upside. That was a grind, by the way. They managed to scratch it out and holding on, and now they've been holding on to the gains. I'm going to look to buy weakness and stay on the range bound with a bias to the upside side of this. So I'm looking to buy weakness at 6,085s, the 80s, and the 65s for rotations back up again. If they trade below that 60, 65 area, I'm going to take off the long bias and going back range bound. So fairly aggressive on that. But if they back off a little bit, I'm going to look at that as a buying opportunity. If we see early strength, they start running this higher, running it to 61, maybe up to 61.10, and then they back off. We may see a little bit of a pullback in the afternoon. So as always, the dynamic. You'll see when the markets are trending up. Usually you see early weakness and then afternoon strength, and the market is trending down. You see early strength and afternoon weakness. Right now, I think we are in the middle of that. It's not quite as obvious which side is going on. So if I see some early strength from the get-go, and then they start failing, we may see them challenge that 65 in the afternoon, maybe even take it out. But we'll see. I mean, we have I believe Amazon, as I said, is reporting in those big tech stocks could certainly move the market in the overnight. So that's how we get started on the ES. We are in pretty good shape if we can take out that 6100 and hold it. So if they take out the 6100, hold it, you may see a run up here and finally challenging that 6150 level. But it's been a knockdown drag. That DeepSeek debacle really put a job on it. Made a spooked the market, and also the tariffs up over the weekend really also added to it. So it's a cross currents out there. I mean, and it's going to be more of it. Just count on it. It's going to be more of that stuff showing up. What's going to be next? Who knows? We do know that earnings are ongoing, but you never know when it comes out one of those political headlines, and suddenly you have something going on geopolitically again. But that's just the environment we are in right now. So starting off range bound with a bias to the upside, look to buy weakness 60, 85, 85s, 75s, 65s for rotations back up again, and below 65s we take off the long bias. And the only short I'm really considering is up against 6100 this first area of resistance. So if that one gets tested, that's a pretty good area of resistance. A nice volume edge, low volume area ahead of us. One level above the obvious would be 6115. So shorts against these two, I would prefer the 6100, but if they start running it higher, the 6115 would be the last one I would look for a short against. Above that, I'm just going to be looking for them to drive this higher. That's kind of the way I would look at it. So leaning towards the long side of the market, let's see if they can move this higher. All right. Looking at the bonds and the Nasdaq, so bond market is trading around that attractor area, this 116.08. Not a lot of pullback. They've been down here, down to a couple of these single prints, and so far they're stalling right there at 25s. If they start taking out these single prints, I'm looking for a test of the 15s, maybe even down to the 10s. I'm not going to really get worried about the reversal until they take out the 115s again. So that would not be surprising if we get the reverse retest of 115 here at one point. So if they take out these single prints, I would look for a short trade, potentially running it down to the 16s, maybe even lower. But it's not obvious that that's going to, and that's a little bit more for being just a technical thing, so, or technical trade. So it's if they start heading lower, there's probably some news which is driving it lower. Employment situation tomorrow could certainly change all that stuff. So you can certainly run it down, reverse retest 115s at that point. But that's a test I'm going to be looking for. So they ran it up here to the attractor, they stalled here. So far they're not really trading away from it a whole lot. So we're still close to trading around that 116.08. So looking to buy against this area at 26s, but it's that's pretty much it. Below that, looking for a retracement trade to the downside, and then potentially buying against the 15s, the 10s, the 04s down to the 15s for rotations back up again. Who knows which one is going to hold these support areas. And on the way up, if it starts trading higher, looking for shorts against 08s, the 14s up to the 20s for rotations back to that 08 level. Or well, a short at 08 obviously is not going to go down to 08. That wouldn't go very far, but that could be a short trade if we see some early strength for rotation back to test these lower edges again. All right, so that's the bonds. Looking at the Nasdaq. And my capital flow over there, and there you go. You look a little bit busy, but Nasdaq is right up here against this upper area, the 21,800s. And if that comes out, if they can take out the 21,800s, I think we may be in good shape to trade this higher and potentially heading all the way back up to test the 22,000. And above that, we are free and clear and can rocket to the upside. So this DeepSeek scare is turning out to be a big ruse. It's probably people figure out that what's really behind it. So, and then of course the tariff thing, the second scare, the market is kind of digging out it, figuring out what's what, and slowly moving to the upside again. But I watched this resistance there. It's a pretty good one. I would look for shorts against it for failure to take it out. So if we get early strength, looking for shorts against 820 and the 860s. 860 being one level above the obvious, for rotations back down again. But if they take out both of these two, 820 and 860s, I would be looking at them running it all the way up here. The first level, say the 840s is right this edge right there, that three-letter edge. So they clear that 800, take out that three-letter edge, and then right back up to the 22. I think we're going to be going right up there. So pretty good spot for a potential structural short trade for a move to the downside. So it's anyone's guess where it's going to go. But up against resistance, you're looking for failure to take it out. That's the default trade you're looking for. If they manage to take it out, yeah, good for you, good for us, and then we can just hop on alongside. But we know we don't want to buy into this area and hope for it's going to break it out. We want to wait for it to break out if we're going to try a long trade. And if they start trading below this area, the 670, 680, I would be 670 to 700s. I'll take off the long bias and go back range bound. At that point, I think we are retracing. And we have all these single prints from yesterday in F period when they run it higher. Now, those single prints definitely should be tested. So if they take out these support areas, we can see a rundown all the way down here to that 21.5 again. All right, so that's the Nasdaq, right, bumping up against resistance. Just be mindful. So technically looking for a short setup against those two upper areas of resistance for rotations back down. Then we'll see if they have the muster to actually take it out or not. Finally, oil and gold. So gold is still holding against in this upper area. I didn't split out gold, did I? No, I did not do that one. Missed gold. That kind of sucked. Hey, hang on. So it's not that big of a change from yesterday. This little edge right there we need to add. There we go. All right, so gold still holding above this 70, 71 area, and they were down here in the overnight testing it and bounced right back up from it. So I'm gonna say we're still leaning long on gold. If they start taking out the two areas, 78 and the 70s or 71s, that's when we take off the long bias and look for a trade in the right down to 28.50. So that's the attractor area on the downside. So on gold, this is 28.50 is where the attractor area is. You see that 28.60, and then you have the 28.70 edge up here. So this is right below that volume edge. So if this area comes out, we can see a rundown all the way down here to that 57 or the 46 high volume area. This whole area most likely is going to get tested again and fill out, probably be a point of attraction. But at this point, they're still holding on to their gains, and why they're trading higher violently like they have been, it's anyone's guess. We'll see if there is something in the works. Doesn't quite make sense, but there's nothing geopolitical which would freak the market out like that. If anything, the geopolitical situation is calming down or starting to get sorted out, if you wish. But starting off on the long side, that's how we're going to trade it. Looking to buy against the 78s and the 71s for rotations back up. Below 71s, look for a rotation down here to the 28.50 area and this general high volume area. So that's the way we're going to start off on gold. Let's see if they're going to try to push this higher. Maybe even take a shot at 3,000. We'll see. Who knows? Oh, hang on. It's like we had to add another level on the top on that thing. We have an edge right up here, potential edge. That's a new high right there on the very high, very top there. So not going to be very aggressive on the shorts against the 92s, 2900s, or that 2905s, since we're leaning towards the long side. They could hold, but I'm not going to be very aggressive against them. And then finally, oil. Still holding in that lower range. Technically, as I keep saying, it's like it's going to start coming down. Yes, not in a straight line. And we did not trade up above that 72 and hold that area. So that was the concern with the potential doing this little tariff thing that they're going to bounce. And of course, this executive order shutting off Iranian oil, that's a short-term shock to the system. And so far, only I had one day reaction, now they're back down again, and we'll see. First, next attractor is going to be down here at the 70s into that high volume attractor area, around the 68 to 70s. Probably going to stall there for a bit, but I would not be surprised if we start seeing some real movements to the downside. They've been a sloppy move. I mean, this whole policy shift is just starting to take effect, but as it does, we're going to start seeing these prices come down. And it's going to come down a lot lower than the 70s, that's for sure. And that's going to drive all the other price levels down with it. Energy is just behind everything in society. So starting off from the short side, looking range bound with a short bias. That's going to be basically the analysis for a while, I think. So looking to sell strength, rotations back down at this point against the 71.80s. 72.10s for rotations back down. A bump 72.10, just take off the long bias, go back range bound, and let's see how far they can take it on the upside. Because you can get days like this when they run it higher, stall, hold there, and then in overnight to take it lower. That's going to be one of these sloppy moves to the downside, I think. Unless we get the announcement of some sort on oil, and you get one of those nice $5 days to the downside. That would be an interesting race, but we're not there yet. So trade oil from the short side. Getting long against the 71 would potentially be an opportunity. That edge held a few times. So that would be the only long I would consider. Below that, I would just be looking at staying on the short side of this. But if you look at oil throughout the day session, if they run it lower, you expect a retracement and a pretty good one at that, and then back and forth it goes. So that's oil to get started. On the long setup, it would be against 71. Looking to sell early strength, 71.80, 72.20s for rotations back down. And if they take out the 72.20, just take off the short bias and go back range bound. So that's oil and gold. So gold from the long side, oil from the short side, back to the ES, and we kind of where we left it. So let's see if they can hold on to this and take out that 6100s. Now remember, they had to take out 6100 and that level and the 115 before you really get confirmation. So that could be one of those fake outs. They run it higher, suck you in on the long side just to reverse it. So I'm going to be a little bit cautious about that part. It's one level above the obvious actually one level outside the obvious is more than often exactly where they run it. All right, so we'll leave it there, guys. So good trading. And let's see if we can get some action here today, or if it's going to be one of those range-bound holding days waiting for the employment situation. All righty, guys. See you back at 11:30 for the next update. Later.